Now speaking, Byron Purcell, Vice President, Investor Relations and Treasurer. Good morning everyone, and thank you for joining us today. This morning we are pleased to report that our fiscal 2024 first quarter performance exceeded expectations. We saw strong growth in both revenue and profit, driven by the continued success of our Elixir integration. Revenues were up 18% year-over-year, while profits increased 22%. Our adjusted earnings per share was $1.55, an increase of 28% over last year. Our results were further bolstered by a strong focus on cost controls, as well as the successful implementation of new initiatives across the business. Chris DuPaul will be available during the Q&A session to provide more detail on these initiatives. In summary, we are very pleased with our first quarter results and remain confident about our future prospects. Thank you. Rite Aid reported strong results for their fiscal 2024 first quarter, with revenue increasing 18% and profits rising 22%. Adjusted earnings per share was $1.55, a 28% increase over the same period last year, due to successful cost controls and the successful implementation of new initiatives across the business. Elixir integration also drove the positive results, and Chris DuPaul will be available during the Q&A session to provide more detail. Now speaking, Busy Burr, Interim Chief Executive Officer. Welcome everyone to the first quarter earnings call. Our adjusted EBITDA was $92 million versus last year's first quarter of $100 million. Despite headwinds such as soft front-end sales in the retail pharmacy segment and higher than expected medical loss ratio at Elixir Insurance, we were able to offset these with strong script growth, better than expected recovery rate, and generic drug settlements. We made significant progress on our turnaround initiatives to control SG&A spend, grow scripts, and reduce drug purchasing costs. On the pharmacy side, we saw a 10.3% year-over-year increase in courtesy refills due to adherence initiatives and getting our fair share of prescriptions from the Kroger ESI dispute. This was offset by negative 3.8% front-end sales comps, excluding cigarettes and tobacco products, due to reduced demand for respiratory-related products, inventory challenges with the transition of our perishable food vendors, and some inefficient pricing. At Elixir Insurance, we experienced a higher than expected medical loss ratio as adverse selection during annual enrollment is driving unfavorable changes in utilization and drug mix. As a result, we have decided to exit the individual Part D market beginning in January 2024. In addition, we are working on ways to improve front-end performance, including launching an exclusive collection of high-quality clean beauty and personal care essentials at accessible price points, accelerating the rollout of own brands, and hiring new leadership in loss prevention to address shrink. We remain focused on increasing our market presence and look forward to capitalizing on our competitive position. Overall, we are optimistic about the future and believe that the work we are doing now will benefit our business and financial performance in the long term. Now speaking, Matt Schroeder, Executive Vice President and Chief Financial Officer. Good morning, everyone. Our first quarter fiscal 2024 adjusted EBITDA was $91.7 million, a decrease of 8.4% compared to the prior year quarter. We reported a net loss of $306.7 million, or $5.56 per share, and an adjusted net loss of $40.1 million, or 73 cents per share. This includes a non-cash impairment charge for goodwill at Elixir of $152 million. Our retail pharmacy segment saw a 3.4% increase in revenues due mainly to increases in acute and maintenance prescriptions, partially offset by a reduction in COVID-related revenue, front-end sales, and store closures. Same-store sales increased 8.4%, including a 13.3% increase in pharmacy sales. This was driven by increased sales of Ozempic and other GLP-1s, which have a high sales amount per script, though the cost of these drugs is also high. Front-end same-store sales, excluding cigarettes and tobacco products, decreased 3.8%. Adjusted EBITDA SG&A at retail improved by $4.8 million or 46 basis points versus prior year due to cost control initiatives and store closures. Our pharmacy services segment, Elixir, saw a 30% decrease in revenues as we are cycling through membership losses. Adjusted EBITDA for this segment was $21.7 million for the quarter, a decrease of 17.6% compared to last year's first quarter. The decrease in adjusted EBITDA was due to lower membership and an increase in the Elixir Insurance medical loss ratio. At the end of the quarter, we had approximately $1.15 billion in liquidity. As a result of changes in our business since our last call, we are taking steps to reduce SG&A and are now expecting adjusted EBITDA at Elixir to be between $90 million and $100 million, revenues to be between $22.6 billion and $23 billion, and capital expenditure spend guidance to be reduced to $175 million. We are forecasting a use of approximately $100 million to $150 million in cash in fiscal 2024 and expect to have sufficient liquidity throughout the year. We expect to generate approximately 60% of our adjusted EBITDA for the year in the second half of the fiscal year. Evercore IC analyst Elizabeth Anderson inquired, "Can you explain the impact of COVID vaccines, tests, and OTC tests on your core profitability this quarter?" Matt Schroeder replied, "Elizabeth, last quarter we distributed 1.7 million COVID vaccines. In this quarter, only 500,000. We also dispensed 2.5 million antigen kits in the first quarter this year, a drop from last year's first quarter." Evercore IC analyst Elizabeth Anderson inquired, "Can you provide insight into the financial benefits of your impact programs and how we should expect adherence to trend throughout the year?" Matt Schroeder replied, "Yes, Elizabeth. We had a positive quarter in scripts growth, 7.4% without the effects of COVID-19. This is due to our work on adherence, reducing abandoned scripts, and maximizing pull-through opportunities through changes or disruptions in networks. We anticipate this trend to continue throughout the rest of the year. As we move into the second half of the year, we are implementing initiatives to maximize vaccine penetration and improve front-end performance, such as bettering our assortment, faster planogram changes, and more precise price changes, which should have a more significant impact in fiscal 2024. Evercore IC analyst Elizabeth Anderson inquired, "Can you provide an update on the number of lives impacted by exiting the individual Part D market and how these scripts compare to the profitability of Group Part D and EGWP lives?" Matt Schroeder replied, "The number of lives we serve in our Med D plan is around 300,000. These lives are not profitable from an underwriting standpoint and will be discontinued as of January 1, 2024. We expect this to have an impact on our specialty and mail-order pharmacy volume, and we're still assessing the cost structure implications." Deutsche Bank analyst George Hill inquired, "Matt, what options are available to us regarding the 2025 debt maturities?" Matt Schroeder replied, "Yes, George. We have an ongoing dialogue with our lenders and are looking at various options to address the capital structure. Right now, our focus is on achieving a successful turnaround and setting up the business for long-term growth." Deutsche Bank analyst George Hill inquired, "What is the overlap between the pharmacy business and PDP business in terms of script exposure, and what is the value at risk when you exit the PDP business?" Matt Schroeder replied, "I would say the script value is relatively minor compared to our total scripts filled." Deutsche Bank analyst George Hill inquired, "What product categories are driving the higher medical costs at Elixir?" Chris DuPaul replied, "Hey, George. This is Chris. The primary driver behind our performance in this case is the shift in membership base as we cycled out auto assignees in certain regions. Those members that chose to stay through annual enrollment, despite substantial premium increases, resulted in a different mix in utilization. This was more influential than any specific drug category or class." Deutsche Bank analyst George Hill inquired, "Could you provide the VAX assumption for the year in the pharmacy business?" JP Morgan Chase & Company analyst Lisa Gill inquired, "Matt, what has been the impact of the Kroger dispute on pharmacy trends? What script maintenance have you typically seen when such disputes resolve?" Matt Schroeder replied, "I can say that our expectation is that we will retain a meaningful portion of the scripts that would be generated by Kroger locations, given our experience in similar disputes in the past." JP Morgan Chase & Company analyst Lisa Gill inquired, "What proportion of the challenges Rite Aid is currently facing can be attributed to company-specific issues versus macro consumer changes?" Matt Schroeder replied, "Lisa, it's difficult to distinguish between company-specific and industry issues. Regarding our categories, there has been an impact on consumables and private label work. In the drugstore sector, cycling a strong flu and allergy season from last year is having a significant impact on OTCs. We are seeing a more cautious consumer, so we're focusing on elements in our control to improve results and drive sales, such as assortment, pricing, and better targeted marketing." JP Morgan Chase & Company analyst Lisa Gill inquired, "What were the shrink numbers in the quarter and what are the potential opportunities for improvement?" Matt Schroeder replied, "Our shrink headwind for the quarter is about $9 million higher than last year. It's a major industry issue that we're trying to address with closing stores in high shrink areas, investing in security and other product protection measures. We've recently changed leadership and are looking forward to them bringing innovative ideas to help solve this problem." JP Morgan Chase & Company analyst Lisa Gill inquired, "Are you seeing stabilization in generic pricing and better opportunities for reimbursement rates?" Matt Schroeder replied, "Yes, Lisa. We have seen a stabilization in generic pricing and our drug purchasing numbers ended up being better than expected in the first quarter. We are actively working to maximize our savings through our purchasing arrangements." JP Morgan Chase & Company analyst Carla Casella inquired, "What drove the revolver draw to be $200 million higher than expected? Is there an unusual build in inventory or receivables due to vendor changes or CMS receivable?" Matt Schroeder replied, "Inventory is mainly focused on pharmacy drugs, and it has risen due to inflation on generic drugs. We are implementing initiatives to reduce this inventory for both brand and generic drugs. The receivables build is a combination of CMS receivable that we plan to securitize later in the year, as well as timing of payments from PBMs and rebate aggregators. JP Morgan Chase & Company analyst Carla Casella inquired, "What is the total script count on an annual basis?" Matt Schroeder replied, "I'm not able to provide that number right now, but I can send it to you." JP Morgan Chase & Company analyst Carla Casella inquired, "Can you provide more insight into the 25 store closures? Are there any commonalities among them, and what is driving the decision to close additional stores?" Matt Schroeder replied, "We're always evaluating store performance. We actively monitor leases, especially those nearing expiration, to ensure we are maximizing profitability and efficiency. I can't provide a specific number of closures, but rest assured that we are committed to continuing our presence in communities while providing customers with access to our products." Bank of America Merrill Lynch analyst Bill Reuter inquired, "What costs are associated with exiting the individual Medicare Part D segment, and what challenges will you face in eliminating it from your P&L?" Matt Schroeder replied, "William, we are currently looking to reduce costs associated with administering the plan, taking calls from members and compliance with regulations. We expect to begin this process this year. However, it is too early to give you an exact number at this time. We are taking a hard look at ways to reduce costs while still providing our members with adequate support throughout the Med D plan and our business going forward." Bank of America Merrill Lynch analyst Bill Reuter inquired, "What are the expected profitability impacts of administering 3 million COVID vaccines this year?" Matt Schroeder replied, "I anticipate profitability for the COVID vaccines to be similar to that of flu vaccines, around $25 per script in gross profit. SG&A costs will affect the final figure." Bank of America Merrill Lynch analyst Bill Reuter inquired, "What is your level of optimism that Elixir will gain additional lives for next year?" Matt Schroeder replied, "Bill, we're seeing positive response in the marketplace. Consultants are expressing favorable feedback on our bids and offerings. However, it's too early to provide an accurate projection of our sales performance at the end of the year." Jefferies analyst Kara Martinson inquired, "Have you seen an increase in companies coming to market this year compared to the past 3 years of low selling seasons?" Chris DuPaul replied, "Chris here. We're encouraged by the number of RFPs and lives associated with them that we're seeing as we move through the season. So far, we are pleased with our renewal progress. However, it's still early in the season and we will provide an update closer to year-end." Jefferies analyst Kara Martinson inquired, "Have you seen any changes in front-end sales trends since the transition of vendors on the perishable food side?" Matt Schroeder replied, "Kara, it is too early to comment on front-end sales trends for the quarter. We are still experiencing some pressure in June, but it is very early." Jefferies analyst Kara Martinson inquired, "What options are you considering for your capital structure to better invest in your core businesses?" Matt Schroeder replied, "Yes, Kara. We are exploring multiple options to strengthen our capital structure. Our focus remains on improving our performance and setting up the business for long-term success." Matt Schroeder replied, "Thanks, Sarah, and all who joined today. We're excited to provide an update on our second quarter earnings in September. Have a great day."